We're seeing a really interesting counter trend develop with ESG and sustainable investing. And, some of it is political. We're certainly seeing, for instance, Ron DeSantis in the US pushing quite strongly against ESG. But part of it is just a natural sort of a counter trend where, we've seen a big swing towards ESG, responsible, sustainable investing over the past couple of decades. It hasn't. It's not a new thing, but the popularity and public awareness has really grown. And it's really important to think about that this sort of pushback of ESG is really counterintuitive, and it doesn't make a lot of sense when you think back to what we do as investors. There are two primary factors in assessing any investment. It's the return and the risk. And for over 100 years, governance, as in the G in ESG, has been a core part of investment analysis. It's one of the key ways you can understand risk. You want to make sure a company's board is aligned with your interests. You want to make sure that that the payment structures are right, that that governance is being done properly, because a company board really is protecting the value of your assets in that company. So it's not debatable whether governance is an important factor to analyze when you're investing. Really, if you're not looking at your investments and using an ESG lens at some point in the investment process, you're really failing to analyze the risk of that investment in totality. And so we think that the push back against sustainable and ESG investing is probably short-lived. There are some aspects of that space that are quite wishful thinking and really trying to do too much with what is ultimately an investment. But ultimately, things as fundamental as ESG aren't going to go away anytime soon. As investors, we live in uncertainty. It's nothing new to say that part of the role of an investor is in decision making under uncertainty. So when we're looking across portfolios and the way we're positioned at the moment, I would say we're putting a lot of extra effort into being opportunistic and really looking for assets where we feel that we feel confident that the visibility is quite strong for what the likely outcomes are for those investments, or that that we're being thoroughly rewarded for that risk. And so, across portfolios, we're not seeking to really push the boat out on risk at this point in time, but we're not resting on our laurels and just waiting for things to get better. We recognize that in these volatile times, there are going to be plenty of opportunities, and it's our job to identify those and include those in portfolios.